Welcome to the deep dive. We take your curated sources, pull out the key insights, and basically give you that well-informed edge fast.
Exactly. And today we're going deep.
Yeah, really deep into how sustainability, well, how it's gone from being sort of a side issue to a core business driver.
Right. It's reshaping entire business models, creating real competitive advantages.
The sources you sent over, they cover this great lecture with lots of examples, frameworks. It's pretty comprehensive.
It is. And this isn't just, greenwashing or PR. We're talking about a fundamental shift in how success is even defined.
Mm-hmm. So by the end of this, you, the listener, should really get how businesses are weaving in ESG, environmental, social governance, into strategy.
Not as an afterthought, but right at the core, and how that impacts, well, pretty much every industry.
It makes you think, doesn't it? You see companies everywhere talking about purpose now, not just profit.
Yeah, it's everywhere.
But what's really driving it? What's actually changing underneath?
Good question.
Okay, so let's unpack that fundamental shift first, this idea of moving from cost to purpose.
Right. So the traditional view was very much laser focused on cutting costs, efficiency, short-term financial wins. Simple as that, almost.
Maximize profit, minimize expense, quarter by quarter.
Exactly. But this evolving perspective, it's much broader. It brings in those ESG factors, talks to all sorts of stakeholders, not just shareholders.
And focuses on long-term value creation, beyond just the next earnings report.
Precisely. Businesses are literally recalibrating success.
So it's not just the P&L statement anymore.
No way. They're looking at their environmental footprint, their social impact, how well the company's governed.
And these things are being considered right alongside the traditional financial stuff.
Yeah, so what does that tell us? That things like climate impact are now weighed just as heavily as, say, revenue growth?
Well, it suggests a huge realization, right? That long-term business health is fundamentally tied to the health of the planet and society.
Absolutely. You can't separate them anymore. Ignoring ESG isn't just bad ethics. It's actually bad strategy. It's a risk.
Yeah, you risk regulations, losing customers, investors turning away. You basically undermine your own future.
You got it. It's a strategic vulnerability now.
Okay, makes sense. But this shift, it didn't just happen overnight. The lecture pointed to 5 big global drivers.
Yeah.
First one, policy and regulation.
Right. Things like the EU Green Deal, the CSRD, Corporate Sustainability Reporting Directive, big stuff.
Yeah, these basically force companies to be much more transparent about what they're doing on sustainability.
And accountable. These aren't just suggestions anymore. They're becoming law in many places.
Which kind of levels the playing field, I suppose.
It does. It sets minimum standards, pushing whole industries to adopt better practices.
Okay, driver number 2, consumer demand. This feels massive, especially with younger people.
Oh, definitely. Gen Z, millennials. They're really voting with their wallets based on ethics and sustainability.
Their values are actually pushing the market. Companies have to listen.
They do. Their buying power, plus how vocal they are online. It creates real pressure. Ignore them at your peril, basically.
Alienate a huge chunk of your future customer base.
Yeah.
Okay, third driver, investor pressure.
Also huge. Investors are increasingly favoring companies with strong ESG performance.
You see ESG funds popping up everywhere. It's a clear trend.
And investors get it now. Companies good at ESG, they tend to be more resilient, better at handling risks, navigating regulations.
And potentially, they might even deliver better long-term returns.
Exactly. It's not just risk avoidance. There's this idea of impact alpha emerging, that sustainable investments might actually outperform.
That is a game changer. Okay, fourth, technological advancements.
Yeah, things like AI, digital transformation, they give businesses powerful tools for managing resources better, for innovating.
Like what specifically?
Well, think smart grids for energy, AI reducing waste in supply chains, digital platforms enabling the circular economy. Technology is building the infrastructure for sustainability at scale.
Makes sense. And the fifth driver, global crises.
Right. Climate change, obviously, but also things like the recent pandemics.
They really showed how fragile some systems are, didn't they?
Absolutely. A huge wake-up call. It highlighted our interconnectedness and, frankly, the risks of purely profit-driven models that ignore systemic issues.
So these crises underline the need for more resilient, sustainable business practices. Focus on long-term stability.
Exactly. Not just short-term gains.
So these 5 forces, policies, consumers, investors, tech, crises. Which one feels strongest right now? I mean, they all interact, but...
Good question. They definitely feed off each other.
But I kind of feel like the combination of investor pressure and regulation is creating a really strong push at the moment.
I think you're right. That's a sharp observation. Regulation sets the floor, the basic rules.
Hmm.
But the investor money flows to companies that go beyond that baseline, companies that are anticipating the future, managing risks proactively.
Yeah, it creates this powerful feedback loop,
Yeah.
pushing things forward faster.
It really does.
Okay, so we get the why. Now, how is sustainability actually changing business models at their core?
Right. The lecture stress, it's not just an add-on, not just offsetting or donations.
It has to be baked in,
Yeah,
integrated into how they create, deliver, and capture value.
exactly. So let's break down those core parts of a business model. First, the value proposition itself.
How is that changing?
Well, sustainable businesses often focus on solving real-world problems. They have an ethical or ecological purpose built in.
Like designing durable products or providing essential services to underserved groups.
Precisely, and that obviously shapes their customer segments.
Right. They start looking at broader groups, maybe global communities, marginalized populations,
Yeah.
recognizing the social need and the market potential there.
For sure. And then that flows into their channels and customer relationships.
How so?
More emphasis on transparency, for one, being open about supply chains, operations.
And educating customers.
Yeah.
Helping them understand the impact of their choices.
Yes, absolutely. And building relationships based on shared values, maybe even a sense of co-ownership in the mission.
It sounds much more connected, less transactional.
It is. And that naturally changes the financials too, the revenue models and the cost structure.
Okay, let's talk revenue. What's shifting there?
We're seeing more diversity, moving away from just selling stuff one time.
Towards subscriptions, pay as you go, access over ownership.
Exactly. Or blending ads with mission-driven donations or funding tied to impact metrics.
Interesting. And less focus on just scaling super fast, maybe more on slow, loyalty-driven growth.
That too, a reevaluation of what good growth even looks like.
And on the cost side, does sustainability mean higher costs?
Well, maybe higher short-term costs sometimes.
Mm-hmm.
Ethical materials, fair wages, that can cost more initially.
But the idea is lower long-term costs.
Potentially, yes,
Yeah.
through things like better durability, repairability, reuse, and that customer loyalty we mentioned, which reduces churn and acquisition costs.
So investing in sustainability can actually be seen as risk management and long-term cost saving.
That's the argument. Building resilience against volatile prices, reducing reliance on practices that might become liabilities later.
The lecture also mentioned key partnerships being crucial.
Very much so. Collaborations with NGOs, for instance, for things like last-mile delivery.
Like those examples, M-Water and Kilkari. We should get into those.
Yeah, we will. Also, tapping into government funding for public health or sustainability goals.
And these newer models, like crowd-powered stuff or co-ownership.
Right. Kilkari in India is a great example of the partnership aspect.
Tell us more.
It's a public-private deal, delivers digital health info to low-income mothers. Revenue comes mainly from government grants, CSR funding.
Right.
The tech is low cost, designed for basic phones, and it relies heavily on partners, RMMN, the Ministry of Health, local NGOs.
So it shows how sustainability can drive innovation in partnerships beyond just commercial deals.
Exactly. It reshapes the whole network.
Okay, so it impacts the financials, the partnerships.
Mm-hmm.
What about the direct link with customers? Channels and relationships, user empowerment.
Yeah, there's big focus there. On the channel side, it's often about purpose-driven storytelling, connecting on values.
Not just selling features.
Right. And thinking about the environmental footprint of delivery, too. Low-carbon options, local sourcing.
And using the channel for education, like Ecosia showing trees planted, or I Fix It with repair guides.
Perfect examples. And the customer relationships move beyond just transactions.
Building trust through transparency, openness about where products come from, the impact.
Yes, and actively involving customers. Getting feedback, maybe even co-creating solutions. The goal is long-term trust, not just a quick sale.
And user empowerment seems key here, too.
Absolutely, giving customers more control. The right to repair, reuse, resell, that directly challenges planned obsolescence.
Like I Fix It.
Exactly. They empower users to fix things. Their revenue comes from tools and guides, not from selling you a new device constantly.
It's fundamentally disruptive. It makes you think, wouldn't empowering users always build more trust and loyalty anyway?
It's a powerful thought, isn't it? Any business should be asking that. Genuine empowerment creates a much stronger bond.
Okay, so if the model is different, how do you measure success? It can't just be traditional KPIs.
Right. The lecture talked about a new KPI culture and this key idea of double materiality.
Double materiality, what's that exactly?
It means businesses measure two things: One, the financial risks and opportunities sustainability presents to the business.
Okay.
And two, the impact the business's operations have on people and the planet. It's looking both ways, inside out and outside in.
Right. A much fuller picture, more responsible.
Definitely. And these ESG KPIs are getting serious traction now.
Showing up in executive bonuses, investor reports.
You bet. It signals success isn't just profit anymore. It's a broader set of outcomes.
Ecosia was a good example here.
Perfect example. They don't just report users or revenue. They shout about trees planted, CO2 absorbed, ecosystems restored.
Those impact metrics are central to their whole story.
They are their success metrics in many ways.
So we're seeing other metrics rise. Carbon footprint per user, maybe. Community impact, like farmers supported. Data transparency.
All of those. Metrics beyond pure profit.
And this leads to the idea of impact loops.
Yeah, think of it like a positive feedback cycle. A flywheel.
How does that work?
Take Ecosia again. More user search. That means more ad revenue, which means more trees planted.
Right.
Which builds more user loyalty, attracts more users, and the cycle repeats, getting stronger.
So growth actually fuels the positive impact.
Exactly. It's a virtuous cycle. Growth isn't just expansion. It's directly linked to doing more good.
That totally reframes growth.
Yeah.
So success is financial returns plus tangible social and environmental benefits.
That's the goal. And the lecture gave some great case studies showing this in action. Different models, different places.
Yeah, let's dig into a few. First, Fairphone in Europe. Circular product model.
Right. Fairphone is all about ethical sourcing, designing phones for long life, and crucially, user repairability.
Breaking the mold of throwaway tech.
Totally. Their impact metrics focus on fair trade materials, how much longer their phones last than average, reducing e-waste through that modular design.
What are their challenges? Price, scale.
Yeah, higher upfront costs, smaller scale than the giants. But their advantage is appealing directly to conscious consumers.
People who value durability, fairness. And they're set up well for right-to-repair laws, right?
Exactly. Their value proposition is ethical, repairable, long-lasting tech. Revenue from device sales, spare parts, key partners in fair trade, recycling, advocacy.
Okay, next. Olio in the UK. Product as a service, sharing economy style.
Olio's mission is fighting food waste, connecting neighbors and businesses to share surplus food and other items.
The app is free for users.
The core app, yes, peer-to-peer sharing. They make revenue from paid partnerships with businesses, supermarkets, cafes, helping them manage surpluses efficiently.
And they have those volunteer food waste heroes.
Yeah, a huge community element. It's key to their model, their impact. Millions of users, tons of food shared, massive CO2 savings.
The challenge must be managing those local networks as they grow, especially with volunteers.
No, for sure. But their competitive edge is that purpose-driven community. It drives loyalty, organic growth, less need for big marketing spends.
Cool. Okay, moving to India. Kilkari, purpose-driven B2G model.
Right, Kilkari, government-backed mobile health service, sends voice messages on maternal and child health to new mothers.
Via basic mobile phones. No smartphone needed.
Correct. Reaching underserved women who might lack smartphones or literacy, bridging that crucial info gap. Funding is government and development orgs.
The impact sounds huge, reaching millions, improving care and immunization awareness.
It is substantial. Their edge is that deep integration with the government health system from the start, allows for scale without mass consumer marketing.
And success is measured in health outcomes, tied to SDG 3.
Directly. Challenges are keeping messages culturally relevant everywhere, data security as they grow.
Got it. Then M-Water, Global South, Open Plus paid sauce model.
M-Water provides free, open-source tools, mobile and web, for monitoring water quality and sanitation.
Empowering communities, NGOs, governments to track and improve water access.
Exactly. The basic tools are free. They offer paid premium services for big institutions needing more analytics, custom dashboards.
Scale sounds impressive. Millions of water points monitored, helping millions get safer water.
Yeah. The open source part really helps adoption in low resource areas. And the mission attracts